Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 19th of December 2018. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a look at the markets, a few charts, the usual stuff. But for now, before we start looking at that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute any invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so let's not waste any more of our time and let's jump quickly into the charts. Now the first one I want to touch on here is Nasdaq 100. Now looking at this yesterday's activity and the day before's activity, so basically what I wanted to point out here guys is this little pattern here that we've got. So in other words, which we've got a harami pattern. So basically normally according to all the textbooks, we could see this could be seen as a reversal signal. So basically we do have the body here within the previous candle's body, and certainly this creates this this idea that we could see that the bears are failing to drive this index lower here, so we could in a way see a bit of a correction here to the upside. Certainly this is just according to the theory. As you can see, we're still the index is still trading above this opening price here, the year's opening price, of course. So in a way it's still positive for the year, unlike the S&P 500 and the Dow Jones. So with this one, especially given that we're seeing this little potential reversal signal here, we could in a way aim for higher levels, but in order to be more on the safe side, in a way, if this starts driving towards the 6,575 level, and then eventually we see a nice good close on the daily candle above that level, now this is where more bulls could get excited, as this could mean that probably the downside is slightly off the table and we could see further acceleration here to the upside, where we could then aim for the 6,700 level, or even actually the 6,850. So for now guys, be very careful with this one. Certainly, like I said, keep this idea in mind that we do have a potential harami here formation. So yep, we could see maybe a bit of upside, but if this suddenly, let's say, drops below the this year's opening price, which is near the 6,431.6 level, approximately there, if this starts dropping and then eventually we see a break of Monday's lows, which were near the 6,400 level, now this is where it could become more interesting for the bears, as further declines could be possible, where we could then aim for the lows that we saw here back in April, which were near the 6,325, or even actually going all the way towards this year's lows near the 6,172 mark now. But again, I'll repeat myself, for such a scenario we need to get a nice good drop here below the 6,400 level. So keep your eyes on this one, keep your eyes on this potential formation here that we've got. According to the textbooks, of course, a bullish formation, but again, anything can happen. Jumping into gold, looking at this daily chart, you can see that gold tried overall, of course, is pushing higher. We can see that, but it tried to overcome this barrier today, but kind of slightly unsuccessful. The 1251, the previous high here that we had around the 10th of December. So in a way, guys, this is what we're going to still keep on monitoring. We're going to keep on looking for this potential break here, because a nice good pop above the 1251 could open the path towards the 1266 here in the near term, which was marked here by the high of the 9th of July. So good potential area of resistance, but in order to kind of see this resistance getting tested, again, we need to see a nice good pop and a close of the daily candle above the 1251. If this suddenly reverses back down, you can see that we're still trading above this very steep upside support line here, taken from the lows of the 14th of November, around there. So in a way, for us to get more bearish on this one, let's say, or start looking at the downside, we would need to see a nice good drop here below the 1241.50 approximately there, and then of course we could aim for the 1233 or even 1230. Now the 1230 acts as a very strong area of support here back on the 4th of December, and also withheld the price from moving higher on the 21st of November. So quite an important level this one becomes, the 1230. So in a way, you could for those who are more on the cautious side, you could in a way wait until this, let's say, drives back down here and breaks below the 1230 level, and only then you could potentially aim for much lower levels like the 1220, or even actually this this medium-term upside support line here, taken from the lows of August, and which could get tested. But then again, for now, keep on monitoring the upside, because at the moment we're closer to that scenario, that potential scenario. But again, we need to see that good break here, a good pop above the 1251 level first, and then we'll aim for much higher levels. Jumping into Aussie CAD. Now this one is a very interesting one. So today, just about 45 minutes ago, we did receive the Canadian CPI figures, which came out a little bit worse than expected, and certainly that should have played a bit a worse role, let's put it that way, on the Canadian dollar. But as you can see, looking at this Aussie CAD here, initially today the pair tried to push above this key area of resistance near the 0.9670, but as you can see, the pair is kind of retraced back down here, all the way back below the 0.9670. I mean, it had a nice push here higher, managed to reach the 0.97 level, but since then kind of retraced back down and pushed lower. So jumping into a 4-hour chart on this one, just let's have a look and see what's happening here. So you can see that it even managed to drop below, at one point it managed to drop below the pivot here, which could, if it would have stayed here, of course, below, this would be a bit of a bearish indication, of course. So today, probably, long story short on this one, we'll continue monitoring the 0.9670 level, because if this pair stays below this and closes the daily candle below this level, well, I mean, probably could look a little bit bad for this pair going into tomorrow or even Friday. We could see maybe a bit of declines here, where we could then aim for the, let me just adjust this level slightly here. This is where we could potentially aim for, towards the area around the 0.9620 mark, approximately there. But if this of course could be just seen as a nice pit stop for the bears to kind of refuel, and if they still remain in control here, further declines could be possible towards this 200 EMA here, shown as the black line. So for now, anyway, guys, keep an eye on the 0.9670. If the pair manages to close back above it, or should I say manages to move back above it and close above this level, then yep, tomorrow we're going to be keeping a close eye on these highs, because these are going to be our gateway. This is going to be our gateway towards much higher levels. So basically, we will need to see a nice good push above this 0.97 level in order to kind of aim for areas like the 0.9775, which was marked here by the high of the 2nd of December. So for now, in a way, today, keep your eyes on the 0.9670. Jumping into USDJPY now, this one, and before I start looking at the 4-hour, let me just quickly show you the daily, basically. So you can see that today is trading here between this key important area of support near the 112.2725 area, around 25 area, let's put it that way. So it's trading here slightly above that, but still below this medium-term upside support line that got broken yesterday and today. Like I said, at one point it tried to move back up here, but failed, and now it's currently sitting here. So in a way, this is going to be the one that we're going to be keeping a close eye on, the 112.25. If this is going to get a nice close here below this, then yep, further declines could be possible, and this is where we'll aim for initially for the 200 EMA here, but then towards potentially towards this little area of support near the 111.3837, something like that, which was marked here by the lows of the 26th of October. So approximately there, guys. Again, but in order to kind of aim for this level here, we need to see this good, nice good close here on the daily candle below this 112.25 level. If suddenly this reverses back up here and ends the day above this upside support line, well, I mean, this probably the upside could be back on the table. Of course, we'll be very cautious with this one, but looking at the 4-hour chart, certainly if this travels back above the 112.65 zone, approximately there, then of course we could potentially aim for higher levels. But for those who are on more cautious side, so you could in a way look for a move here above the 113.1215, approximately there. A nice good move, a nice good break above that. This area could open the path toward back up here towards these levels that we saw recently, or to be more precise, last week, around the 113.70, 60. So for now, guys, certainly looking at this picture that we're seeing right now, I mean, because it's kind of trading here below this medium-term upside support line, but still holding on to this support level, we're gonna probably stay a bit more like bearish, just because, like I said, it's trading now currently below this upside support line. But again, for the confirmation of further declines, we need to see this good break here below the 112.25 area. Jumping into GBPCHF, now this is a very interesting one here. So kind of currently stuck in this little range here, and let me just mark the upper bound, upper side of it. So this is where we're stuck here right now. So basically on the upside, it's slightly it's stuck just below the 1.2590 level, and on the downside we do have this area here marked at the 1.25 zone. So basically this 90 pip range here, this is where the pair is trading at right now. So in a way, this is what we're going to be keeping a close eye on. A nice good pop above this area here, above this upper side of this little range, could potentially open the path towards the 126.45, or even actually going all the way here back to test this in a way tentative upside support line taken from the lows of the 4th of September, and it could in a way test it from underneath. So it could be a very nice, interesting trade here, but again, for the upside, we need to see a nice good pop here above the 125.90 level. On the downside, as you probably understood now, we need to see a drop below the 125 level in order to kind of aim for slightly lower levels. Let me just adjust this area here. Now, initially, of course, we'll aim for this little high here, not far from the breaking point, but only about 15 pips away from it. But if that doesn't hold as well, then yep, further declines towards these recent lows here, towards these December lows, could be possible. This is where we will then aim for the 123.80 zone again. So for now, keep your eyes on this one. Keep your eyes on these two levels here. On the upside, the 125.90, and on the downside, the 125 zone. So yep, and the last pair I wanted to quickly touch on, and that's euro dollar, having a nice run here to the upside. So finally breaking the 114 level, and currently aiming for the 114.45 area, approximately there, which was marked here near the highs of the 10th of December. So this is what we're gonna be looking at. Probably not today. We could maybe see a bit of a correction here back down, but as long as it remains, let me just quickly put an arrow here, as long as it remains above this 114 level, we'll continue aiming for higher levels. So like I said, we could see maybe a further acceleration here to the upside, but then we could potentially curve up, move a little bit down here, and this 114 level could become this nice area of support here, which will be heavily monitored. If of course, if that's going to break, if this, let's say, after it retraces back down here, if it decides to break the 114 level, certainly still not all is lost for the bulls, because as long as it remains, as long as the pair remains above this 200 EMA here shown as the black line, we will continue aiming higher. Certainly this could be classed just as a correction, and yep, this is where the bulls could pick up the pace again and drive this one further up here. So at the moment, certainly this looks more bullish than bearish, but don't forget that we could see a bit of a retracement here at some point, and yep, in that case, if we do, keep on monitoring the 114 level, especially if it breaks, but especially keep an eye on this 200 EMA, which also could provide some support. So yep, it could be an interesting trade here again, to the upside. On the downside, if this suddenly drops below the 113.65 area, approximately there, now certainly we're going to continue monitoring this short-term upside support line, taken from around the lows of the 12th of November. But in order to kind of aim for much lower levels in the near term, I would say we need to get a nice good drop below the 113.30 again. Of course, initially breaking the this upside support line, but then a drop below the 113.30, and only then we'll consider possible declines towards the 113 level, or even actually going lower here towards the 112.70, or even actually going all the way down here towards the November lows. But again, that's a bit of a long shot here. So for now, this is looking more bullish than bearish, and yep, keep your eyes on the 114.45. Okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me tomorrow morning in my Traders Espresso, and that's 7 o'clock GMT time. So, but for now, I hope you have a fantastic evening. Bye for now.